Good morning. It's after 12 a.m. Another week. So first, let me show you something. Let me show you something. This was the only trade I took last week. I said the way I trade, usually my day trading, once I hit my target for the week, which is 60 pips, I'm done. And that was it. And when you look at the weekly movements, both in the London, New York, including Asian section, you look at it and you discover that day trading is not everyday trading, and that is what brings consistency. Even in flipping, you want to flip an account, you have to have specific days of flipping, and the best days of flipping are days where it's not visible enough on the daily time frame. People are trapped based on liquidity. Now this is a day trading account. This was the only trade I took last week, which was on Monday. I posted it, and that was all. Now this is my overall. I started an account, my day trading account, on February 24th of February. So this is the last 3 months, the deposit and the withdrawal. So based on everything you are seeing here, it's at least 20 something percent. You can calculate it yourself. Now in just 1 month, which is not an aggressive account, it's just taking it little by little and entering in on days that matter. So now let's go to price. Now price, when it moved from, correct me if I'm wrong, analog to digital, the programmers that created it wanted a specific system by which everybody can be trapped. Anybody can be trapped except them, because they are the ones controlling the market. So they needed a way, a system of trapping liquidity from the higher time frame down to the lower time frame. The higher time frame being the dominant factor in the game. So let's go to our weekly analysis. I only trade GU. You have seen it from my results, but there was a time I traded Euro GP where I had to stop because I needed to focus on one pair, because that is what brings most consistency in the forex market. Trying to jump in different pairs, but they have similar movements. from time to time, but they can go against, because that is the only way they can trap liquidity. Now, I want you to write, if you are listening, anybody listening, to write this somewhere. The most manipulated time frame is the daily time frame. Reason being, whatever that is being done on the daily time frame reflects on the lower time frame. Have a way of manipulating the 4 hours, 8 hours, 1 hour. But when the algo tends to print price, it starts from the lower time frame. You grab it or you don't grab it. You see that? No. Now, what you need to understand about price is that it's all about liquidity. It's all about trapping liquidity, especially the higher time frame liquidity, because those are the guys that uses large volume, large amounts of money enough for them to catch trend trades in the market. So those are the ones they really like very well, because they're putting billions of dollars or millions of dollars into the market. So anytime you see the fractality of price in conjunction to premium and discount, have or has, anyone you can call it, a way of manipulating price. So when you look at price, let's look at the dollar index. Because that is where we need to go every week. We need to touch on it. Though this the daily time frame, I'm supposed to start on the weekly. Now, if you're a pattern trader, a W bottom has been formed. It has nothing with W bottom or anything. It's just a way of trapping pools of liquidity based on my own analysis. Now let's go to the weekly time frame. Now, for me, I am anticipating continuation move bearish. Any PDRAs or confluence that indicates reversal should be a trapped liquidity. Let me say it again. Any PDRA or confluence that indicates reversal should be a trap liquidity. Remember, I don't say must, should be, can be. So I'm anticipating bearish move this week on the dollar index, which indicates to GDP USD seeking what? Higher price. Euro USD seeking what? Higher price. Now let me take you to Euro USD. Sorry, please, it's a little bit, it's taking time, so we have to be patient. Sorry, I have a little bit of cough, so. I created this YouTube channel to help traders, upcoming traders, to know price more than their fellow traders. So based on years of experience. Now, I'm not saying the Euro USD cannot still move lower, but that is not what I'm anticipating this week. I still want to see higher price. You see, these equal highs that I marked is a way of trapping pools of liquidity, believing market is going to sell short in an what upward momentum, upward trend, because that is the way they can trap large pools of liquidity, because there are people interested in this price and want to sell short to see price move lower, which I'm not interested in. So let's go to the daily. This is the Euro. Let's go to the daily time frame. Now look at these equal highs on the daily time frame. Someone that is a long-term trader is short and is still in profit, or someone have sold presently now and is expecting lower prices. Now, his liquidity is resting above this high. Let me show you. Or liquidity are resting above these highs. Pools of liquidity and interested sellers that are willing to put their buy stops or buy side liquidity up here for you to make money. So what is just there is that resting above these highs that you see that I'm marking with this arrow or this cross are liquidity residing and resting, large pools of liquidity, smaller hedge funds, sometimes even banks. Their liquidity are resting above because they want to see price move down. And if you are looking at pattern traders, see it as as a nice M pattern for a continuation move down. I want to see their liquidity cleared. I want to see them lose their money. I don't have sympathy in this game. I want to see them cry blood. Now, that is the analysis for Euro USD, bullish. Now, my analysis for tomorrow, because I like trading when it's not obvious, because that is what gives me an edge. Trading when it's obvious is when I'm trading when it's not obvious and it's not giving my result. I will now wait till when it is obvious. You see how price tapped into this 1300 level and move down. Reason being that there's liquidity resting above these highs. The liquidity resting above these highs, anybody trying to sell short will be trapped, and price will likely push to the upside. So now I want to see price move to the upside right now, today, possibly London and New York session. So I want to see price move to the upside. I'll be trading live tomorrow. Let's see how much we can make tomorrow. So my narrative and bias for tomorrow is bullish. So I want to see bullish bias tomorrow. So during London and New York, I am bullish. So we are done with GDP USD. Now for gold USD is a very nice pair this week. Very, very nice pair. Nice pair. We have a strong bullish momentum. So we should have a strong bullish momentum this week. Though last week there was a nice buy on Tuesday. When I saw that bullish momentum on Tuesday, I took the buy. It gave a very beautiful buy. Now today, looking at price tapping into this bullish order block, retracing back, clearing out lower level longs on Friday. So lower level longs on Friday, price retracing back down because there's no free money in this market. So price is likely to move to the upside, which is today, Monday. So also GDP USD, in case I made a mistake by saying when I'm going to trade. I'm trading today because we are at 12:37. So I'm seeking bullish momentum. I want to see 60 pips in the market. I want to see price move to the upside. So now on GJ should give me that bullish momentum. Very beautiful trade tomorrow. On GJ, it should be buy. I don't want to be confident or that confident enough, but it's a very nice buy tomorrow after tapping into this bullish order block for a continuation move to the upside. Now, why I said the daily time frame is the most manipulated, because every time frame has its purpose when it comes to manipulation of price. Now, when you look at price, anytime you see price that shows a bearish move on the daily time frame, you will discover something that on the 4 hours, 1 hour, 2 hours, you will see what they call break in market structure. Now, that break in market structure, I told you, is the phenotype of the market. That is the phenotype of the market. Liquidity is the genotype of the market. Now, right here, you are seeing here, okay, on the 4 hours, we have a break in market structure. Okay, we should be seeing a bearish move. Nobody can really tell when an higher time frame reversal will take place, but with years of practicing and understanding of price, you'll be able to what? Detect, understand, and dissect where price is likely to go to. So when you look at it now, you see break in market structure, but I'm still seeking bullish momentum in the market. So tomorrow, another nice buy on GJ. So based on my analysis and based on my narrative, now I want to see GDP USD bullish, weekly bullish. I want to see Euro USD bullish. I want to see gold bullish. Today specifically is a nice opportunity for GU to buy. I am buying, and if the buy does not appear today, I am going to wait to see a buy signal in the market, possibly maybe on Wednesday or Thursday or Tuesday, to engage in the market. I like to appear when nobody is entering or suspecting the market to give bullish momentum. And I also like to wait when I'm wrong, in other way for me to read the price or read the market more, for me to have an accurate result. For the past 1 month, I've been removing money from my forex account and using it to do what I want to do. But it's not something you can do in a day. It took me 4 years to master. So what you need to understand and what you need to focus on is you have to have a deep understanding about price, because that is the only way you can be profitable in this market. There is no sympathy. Money does not have sympathy. Money does not have empathy. It's a zero-sum game. Now, liquidity have to be cleared. Now, when you see this bullish move on BTC USD on the daily, people are posting online. That is the beauty about trading. It does not matter the kind of trader you are. What matters is the drawn liquidity. Are you right at that specific or particular moment? So now, there was a nice bullish move yesterday which was Sunday. I've entered a new day, which is Monday. Now, if you look, let's look at the USDT dominance. The USDT dominance. This is the daily time frame. Let's go to the weekly time frame. Now, seeing this on the weekly time frame, you might there's a strong, believe me, there are people that are buying BTC now for a large move to the upside. Is their own. Me, I'm a day trader. Sometimes I'm a swing trader. But me, my own is to make people cry blood. I don't have sympathy. My own is to make analysis that is outside the analysis of other people. As this market is now, is about to trap, based on my own analysis, is about to trap shorts on the dollar USDT dominance. Now, if the dollar USDT dominance is trapping shorts, that means buy side liquidity is resting above these highs. Let me show you. Or buy side liquidity are resting above these highs. These highs here. We should see possibly an aggressive move to the upside, thereby trapping traders that are willing to buy BTC at that price and still seek lower price, thereby clearing that liquidity out of the market. Because there are people, or the algo is repricing for what, an higher price. So I'm still looking at BTC USDT as a bearish move. Now, CAD JPY is a very nice pair. I can catch it, just I have a lot of pairs I can take trades and catch them momentum. But I just stick to GU because I like taking one pair and I don't want to expose myself to so much risk in the market. That is why I know what I can do to manage myself. Now, I want to see price still move lower. You see, this is what they call fractality of price. Anytime, in all time frame, in bearish move, anytime you see up close market, up close week, up close month, up daily, up close 15 minutes, 1 hour, and the market is seeking bearish momentum, is an opportunity for what? A premium price to move to discount. If you understand, you understand. So every up close move should what? Be an opportunity for a move lower. Sometimes you might be right, sometimes you might be wrong, but imagine being a swing trader and able to catch at least 600 pips from where price started showing his hand and coming down. From 108 to 102, that is 600 pips. 600 pips. For you, correct me if I'm wrong. Now, I'm still anticipating CAD JPY to still seek bearish move. On USD JPY, I want to see bearish move. I'm seeking bearish move. I might be wrong, it's them that know, but I'm still seeking bearish move. Let's see what happens this week. Now, on Euro USD, Euro USD is giving that bullish momentum, but there's a tweak towards this manipulation. But anytime I have my narrative, I do my narrative from the dollar index, so it gives me clarity. So no matter how the market or any other pair that is correlating with the dollar is behaving, it's none of my business. Because when I see the dominant factor in the game and I analyze it right, the pairs I'm going to engage with or engage on should give me something in line with the underlying narrative from the dollar index. So what is there now? I am anticipating bullish move on Aussie USD. Any movement lower, this is the weekly time frame, is an opportunity for what? A move to the other side. So any discount move is an opportunity for premium move. So move into discount gives a better price for a premium move. I want to see price still seek higher price on Aussie USD. Thank you. Now let's go to GDP card. GDP card. GDP card. I'm still seeking bullish move. There's no time to waste. Now if you look left, there are traders that trade supply and demand. Them too, they'll receive it hot in this market. Supply and demand is also, you can still call it support and resistance, but it's just being rebranded. As price taps into these old highs, if you look left, there's an old high. There are people that are interested in selling short. They might be right, and they may be right. Sorry, they may be wrong. Anyone, you are in an environment that is filled with probability, but it's how good and how fast or how well you can understand price makes it much more easier for you to make money. Now I'm anticipating bullish move on the British Canadian dollar for a continuation move to the upside. So this engulfment that shows bearish move, anybody short, I'm anticipating for them to be trapped for a continuation move to the upside, especially after tapping into this weekly fair value gap. You might see fair value gap have different ratios of engagement for continuation move up. You might see price can reverse once it taps into the premium of the fair value gap, the equilibrium or the discount. Nobody really knows, but this is the weekly time frame on GDP card. I'm seeking bullish move. Another pair again that is very nice is GDP NZD. GDP NZD gave a very nice move. Now moving to the upside, I'm still seeking bullish move on GDP NZD. So any bearish move should be an opportunity for bullish move, but you can still be buy bias today, which is Monday. Now if you are wrong, it's either you wait for that bullish move to come into the market for a continuation move to the upside, or you buy every down close candle that comes in. Then anytime you have a loss, by the time you are making your wins, because you are targeting high risks, you are targeting high reward, you get 10 to 1. You are talking of 200 pips into the future for swing traders. So for day traders, you buy today. If you are wrong, you wait till when that bullish move appears into the market, then you engage with it, and that's all. So I'm still seeking GDP NZD to be bullish on the weekly time frame. Even Aussie too. Aussie should give me bullish move on the weekly time frame this week. Aussie should give me a bullish momentum this week. But I would love you to the weekly to tap into this fair value gap. Okay, sorry, the weekly, yes, nice. The weekly should give me, I was looking at the daily before, sorry. Now this is the weekly time frame. I'm seeking bullish move. I'm anticipating price to go to 2.0700, at least 100 pips possibly to 200 pips. So I want to see price move to the upside. Now I want to say something. PDRA is like support and resistance, fair value gap, and all these factors that have a statement or readings with price action in the market. It's not that they don't work, they work, but narrative is outside of price. The bias is outside of price. So you as a trader, you have to be very skilled or very accurate to some extent to be able to get the result you are looking for, so that when you are trading in a long run, you always end up on a positive equity. You always end up positive. So now, to summarize everything, GDP USD buy, Euro USD buy, gold buy, GJ buy, CAD buy, Aussie buy, GDP NZD buy. Mind you, I'm talking about the weekly narrative. Now, looking at USD CHF, as I anticipated last week, I'm still anticipating bearish move again this week on USD CHF. For USD CAD, I should be anticipating bearish move also. Bearish move on USD CAD this week again. Now on Euro JPY, bullish move. Euro NZD, bullish move. Euro CAD, bullish move. You can join Euro Aussie. Aussie USD, bullish move. NZD CAD should be bullish move. Aussie NZD, just leave it. Euro Aussie, bullish move. I want to see the dollar, USDT dominance, to be bullish this week. That means BTC should be bearish. Ethereum should be bearish. The dollar index, I want to see it move bearish this week. USD JPY, bearish this week. CAD JPY, bearish this week. So I don't want to go into the stock market and oil. Oil, very beautiful. Oil. I saw a very after the market close, I saw the weekly time frame on crude, which is the CFDs on crude oil. Now, what I'm anticipating this week on crude, I want to see lower prices. There are big players seeing this market now at a key support zone. I want to see their money packed. Especially long-term traders. Big players trade long-term. They don't trade the way we trade, because they have huge amount of money and they need lots of liquidity for them to facilitate that market. Not that just for transaction, you need more money. You are risking $100 million at this lows now. As a trader that is managing funds, $100 million, and will you be entering on a day-to-day stance? You wait for a weekly move so that it will go and give you reasonable amount of money added to your capital. But me, I am anticipating bearish move on crude oil this week. Bearish move on crude oil this week. Let me just show you. So if you're a swing trader, you should capitalize on this opportunity, because some people have done analysis on crude oil and they believing the market is reversing. They might be right, or they may be right, anyone. But I'm seeking bearish move. So let's go to the daily time frame. I don't want to stress myself. Weekly bearish. Let's go to the daily time frame. Sorry, it's not coming up. But I'm seeking bearish on crude oil. Thank you very much. So when you go to the daily, any rally upward, you should seek bearish move. If you see a bullish move, I'm trying to open the daily time frame. It's not opening. I don't know. So in my next video, I will once the charts open on the daily, I will explain further. So thank you very much. So let me just quickly do short summary. GDP USD bullish this week, Euro USD bullish this week, Gold USD bullish this week. Yeah, there should be buy opportunities, but you have to be careful because we might see price move down. But bullish this week, GDP JPY bullish this week, GDP card bullish, Aussie bullish, NZD bullish, USD CHF bearish, USD card bearish, Euro JPY bullish, Euro NZD bullish, Euro card bullish, Aussie USD bullish, NZD card bullish, Euro Aussie bullish, USD dominance bullish, dollar index bearish, Ethereum bearish, BTC USDT bearish, USD JPY bearish, CAD JPY bearish. That's all. US oil bearish. Thank you very much. Forget about the stock market. Can use these ones to perform some magic. And before I close, irrespective of this dollar index and USDT dominance are the controlling power. Remember, I said the daily time frame is the most manipulated time frame. Each of these individual pairs can move on their own free will in order to create more pools of liquidity, but at the end of the day, they will come in confinement with the overall bias of the overall dominant factor that controls those specific pair, which is the dollar index. So thank you and God bless.